On the other hand, he claims that Bitcoin is not a threat to the US dollar. And I think in that sense, he's talking out of both sides of his mouth. And I can only assume that the reason is he doesn't want to draw the ire or the attention of the US government.
Welcome to Dream Richer. Today, Michael Saylor, a strong advocate of Bitcoin, and Frank Giustra, a strong advocate of gold, both go head-to-head in a heated debate. The biggest concern most Bitcoin critics, such as Warren Buffett, have stemmed from the idea that it has no intrinsic value. Unlike the stock of a company, where its value is backed up with company values and output, Bitcoin seemingly has no value, and as such critics argue that it's all just an overblown bubble. Similar to fiat currency, Bitcoin, or most of the cryptocurrencies, is also not backed by any gold or silver, hence does not have any intrinsic value. The value of any currency comes from the backing of the state and the trust that people have over the government. Hence, for any money to be established as an exchange of value within a network, it is important for the network to trust it regardless of who or what is backing it. This is exactly where Bitcoin is gaining its value. The trust which millions of people have imparted on a cryptocurrency in a completely trustless environment decides the value of the cryptocurrency. Millions of miners and traders are altogether considered the participants of the Bitcoin network who trust the world's largest cryptocurrency and are deciding its price on the sole principle of its demand and supply. Today's discussion is very interesting and looks at Bitcoin from both perspectives. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
That I have a real problem with Michael's approach to promoting Bitcoin, because he tries to have it both ways. On the one hand, he is panicking people into buying Bitcoin as a protection against this incredible M2 money growth, which he calculates at 20% a year and going forever at 20% a year. If he's right, and I don't disagree that that's the direction the dollar is going in terms of money growth, that would create severe problems for the US dollar. It would obviously devalue the dollar over time because you would bring in a lot of inflation. And so, on the other hand, he claims that Bitcoin is not a threat to the US dollar. And I think in that sense, he's talking out of both sides of his mouth. And I can only assume that the reason is he doesn't want to draw the ire or the attention of the US government because it's easier to go after gold. The authorities are never going to come to gold's defense. And actually, in a way, he may be doing them a favor by disparaging gold. But again, he can't have it both ways. You can't make that claim that Bitcoin is going to go to the moon and subsume all the value of every asset class and not be a threat to the US dollar.
Well, Frank says Bitcoin's not an effective payment network method, but the point really is PayPal and Square and Venmo are providing billion transaction, instant speed of light throughput on top of Bitcoin's network. And so the payments are going to come from the application layer, the layer 2 or the Lightning network. Frank says it's not as secure as I think. Well, I think crypto keys, or holding the keys to a cryptocurrency, is the highest property right that the human race has ever invented to date. We can't have stronger property rights than holding $100 million with password keys in your head or multi-signature keys. Everything else is a weaker property right. I think that the way the world's going to end up, everybody's going to have a selection of currencies in their mobile wallet and assets in their mobile wallet. And they're going to be the top 10 currencies. The dollar will be the king currency, and they're going to use it as a medium of exchange and instant payment on the network. And then there'll be strong assets. The strongest will be Bitcoin. People will have other assets. And Bitcoin doesn't have to be a currency to be successful. The world, and as long as there are successful countries, they will maintain their currency. I think the losers will be the weak assets and the weak currencies. And this is not a currency war with Bitcoin. This is an asset war. And that's why considering whether I want to put my money in gold or Bitcoin is appropriate.
Much like God did not design a world of eternal peace, no competition between nation states, no lust for power, no greed, and we're all sitting around the campfire holding hands singing Kumbaya. That's not the world we live in. We live in a very real world of competition, and I think this is where gold plays a very important role in balancing that competition. What I've heard from him over and over again is, in all the interviews, he claims that Bitcoin has 196% annual compounded growth, and then he frames it that is going to be achievable each and every year going forward until Bitcoin reaches 1 million, or I've even heard 5 million from him, using statements like it's going to double every 6 months. That's a gross oversimplification and dangerous if you rely on it to make your investment decisions. Calculating compounded annual growth is very sensitive to your entry, starting points, and ending points in the period that you're measuring. It's garbage in, garbage out. And to arrive at his 196% number, he starts at $1 per Bitcoin, $1 in 2011, takes it all the way to $60,000, and which includes the fact that most of that return was front-end loaded into the early years from $1 and up. And I have several problems with that approach. If I were trying to pitch you on buying gold, I would say to you, well, listen, if you bought gold in 1971 at $35 an ounce and you held it 50 years, it would have gone up 50-fold. That's 6,000%, which works out to about 8% a year of compounded annual growth, which is slightly better than the S&P in that same period. It's pretty good, right? If I wanted to underscore the extreme, I would say to you, hey, listen, if you bought gold in 1971 and you held it for 9 years, which is roughly the amount of time that we're measuring in Bitcoin, you would have had a 42% compounded annual growth. And I think that's where, you have to always be aware, garbage in, garbage out. Now, again, as I said earlier, he keeps pointing to last year, gold didn't perform, and that's a certainty that it's not going to survive as a store of value. And like I said, you can pick any one of the last number of years for Bitcoin, and I can paint you a much worse picture.
In economics, something has value if it checks the following two boxes: scarcity and utility. Scarcity just means that something has a finite supply. In the case of Bitcoin, the cryptocurrency has a set cap of 21 million Bitcoins. Many analysts note that this set cap makes Bitcoin more desirable than other assets, even gold. That's because, unlike with gold, there's no need to worry about a digital gold rush. A treasure trove of Bitcoin won't ever be discovered, causing the crypto's price to crash with an influx in supply. So if Bitcoin has scarcity, what about its utility? Many believe the cryptocurrency's utility lies in its potential to be a more efficient commodity than we already have. Proponents of Bitcoin like it for a number of reasons. First, Bitcoin is decentralized, meaning no government, bank, or single person has control over it. Hence, it can't be toppled by corruption at the top. Secondly, it's also trivially divisible, meaning you can buy a small item, like a donut, with it as easily as you can buy a house or even a mansion. And finally, the code it's built on is open source, meaning that it's available for anyone to look at, scrutinize, and even modify. This means Bitcoin is constantly evolving and improving.
In March of 2020, when the markets crashed, COVID hit, markets crashed, gold went down 8% initially in that month and then recovered to break even. It did much, much better in emerging markets because there was a flight to liquidity, which usually has a temporary lifting of the US dollar. If I look at Bitcoin in that same month, it went down 40% peak to trough, ending the month down 25%. Bitcoin only really took off in October of 2020 when it looked like the economy was about to recover, so it was risk on. Gold, on the other hand, did really well in the spring and summer of 2020 when the markets had crashed, QE had begun, and it was risk off. And that's, I think, is the very big difference that you have to pay attention to.
Frank says I'm claiming that Bitcoin will go up 195% a year. That's not true. I've never given any precise estimates for future growth rates. I don't know. I have no crystal ball. I just think it will perform better than the alternatives based upon the laws of physics and the technology dynamics. With regard to time frames, you don't need the 10-year time frame. I think the 1 and 5-year time frame analysis for Bitcoin are also definitive. And is Bitcoin a store of value? Well, I mean, it's people keep saying it isn't. It seems pretty obvious that something that keeps going up in price and up in value is a better store of value than something which is stably not going up.
Yeah, first of all, I have real trouble with you denying your ongoing claims that Bitcoin has performed, has an annual compounded growth rate of 196%, and you use that to extrapolate its future performance. You have said it time and time again. I will actually tweet your words right back at you after this is done, because that is absolutely not true. I think your idealistic view of the world is really just so off the mark. We live in a world where the world order is fragmented and it's getting worse and worse. You're not going to get this global cooperation to get behind Bitcoin, and with all of the energy assumptions that you're making, it's just not going to happen. That's not the real world we're living in. And again, I will go back. If you look at how the governments and central banks will perceive a high Bitcoin price, it's going to be a threat. They will see it as a flight of capital, and they will deal with it the same way that you've seen current capital controls in countries like pre-war Germany, pre-Thatcher Britain, where you could only export 2,500 pounds a year, Greece in 2015, South Africa in 2003. When governments see a threat to their currency because there's a flight to something to get out of that currency, they will go after it. All right, well, I think I've made my case already as to what Bitcoin is and Bitcoin isn't with respect to gold, okay? I pointed out the risks that Michael never seems to want to acknowledge, so now at least people can look into that a little bit more carefully. The idea that rewards come without risk in this world is you can't gloss over that stuff, and I would just want people to understand the risk of what they're getting into. So you can't keep on selling this as a guaranteed winning lottery ticket, and as a cure-all for all the world's ills. You know, some utopian fantasy that you're selling here. This isn't snake oil, and you should stop selling it in that fashion. The idea that Bitcoin can go up by a factor of 10 times, consume all the value of gold, and then consume all the value of bonds, $300-400 trillion, I just don't see what world that could possibly happen in. It's just, in Michael's world, all you own is Bitcoin. That's the only asset class you own. And that's not the way that you're going. It's just never going to happen in the real world. It's sheer fantasy. Now, I don't want to get personal here, but I just find your style of promotion as misleading and filled with hype, okay? And the one thing that caught my attention, and the reason, that the catalyst to why I wanted this debate, is when I heard you say time and time again that people should buy Bitcoin, hold it forever, and if they need any cash, they should borrow against their car, their house, their businesses. That is such a reckless and irresponsible thing to suggest. I will bet that 90% of your 700,000 Twitter followers are not millionaires, never mind billionaires like yourself. And if these guys are levered up and we have an 80% correction or a 50% correction in Bitcoin that lasts a few years, you're going to wipe out a lot of small investors. And that should really concern you. So I'm just asking you to stop with all the hyperbole. I mean, you're selling this utopian fantasy that is going to probably hurt a lot of people. And I just honestly believe, buy Bitcoin, fine, but you have to own gold as your insurance. And I rest my case.
It's clear from Frank Giustra and Michael Saylor's discussion that despite Bitcoin and gold currently standing as two of the strongest assets in the market, but both have negative and positive points that can be critiqued. For example, the lack of longevity raises serious questions about Bitcoin's ability to be an effective hedge against inflation. Meanwhile, gold has long demonstrated its ability to act as a hedge. Critics argue that there's really no historical data on Bitcoin as an inflation hedge, since there's effectively been no periods of high inflation during Bitcoin's existence. But with the current rise in inflation and economy collapse predicted to come soon, how do you think Bitcoin will perform as inflation hedge? To learn more about the latest crypto news, watch these videos here.